That takes us to the next session where we have another eminent speaker who is basically he is actually an analyst who has been tracking both these metals, including currency, for long time. Chirag Sheth. So Chirag is a principal consultant for South Asia at Metal Focus Ltd, a team of analysts and consultants that possess a deep understanding of the market. Chirag has 13 years of experience in precious metal trading and research and has worked for UBS and Latin Manharlal Commodities. His analysis is for South Asia market, focusing on India, Sri Lanka, and Bangladesh. So I welcome Chirag in today's session. Post Chirag, we will be also joined by Pratik Oswal, who heads a passive business for Motilal Oswal AMC, to take the Q&A session with Chirag. So over to you, Chirag. Am I audible?
Yes, Vikas, thank you very much. Let me very quickly share my slides with you. Right, thank you, Vikas, and thank you to Motilal Oswal for providing us with the opportunity. As you rightly mentioned, and actually I was going to say, what JP Morgan said many years ago about gold, that gold is credit, gold is money, rest everything is credit. But gold is a phenomenal asset, be it precious metals. And to me, in my 17-year career, one thing that I've learned about both gold and silver is that it is a chameleon. It changes its color as change of time. Gold is a currency, it's an commodity, it's an insurance. It depends upon the way you look at both these precious metals, and it's a fascinating one to look at. Now, what has been happening in the gold market? We'll start with gold and then move on to silver. But what has been happening in the broader precious metals market, you have to actually look at it, is that gold, dollar has acted as a perfect headwind for gold prices, and resulting into what has happened to the silver, because silver acts both as an industrial metal and also as a precious metal, right? So silver takes its cues from copper as well as from gold. What is interesting is that we've seen over the last probably 5 to 6 months time a massive flight of capital into dollar since the time that the Fed has started with unwinding of its position. We've seen Fed tapering its balance sheet, Fed going into interest rate hikes, and as the time has passed, as inflation remain elevated, Fed has become far more aggressive. And resulting of that, a lot of other central banks which were actually running behind the curve have also become far more aggressive. So we've seen hikes coming in from as many as 90 central banks of the world. That is the kind of synchronized policy change that we've seen, and I think probably this is a testament to the way inflation has been over the last year or so in the global economy. As you are aware, Fed has sounded further hawkish than what it was earlier. In fact, at the recent meeting, they came out and said that they could continue to raise interest rate, and the interest rate could remain high till the time Fed feels it comfortable. Now, what has this done is that suddenly the interest rate expectation in the US, has suddenly increased to 4.5% for 2022. And that is very, very significant given the fact that Fed is going to maintain extremely hawkish stance onto the monetary policy, which is likely to put pressure on both gold and silver and other precious metals in the near term. However, as something Kishore pointed out, I think most of the investors should be looking at the way both these precious metals are likely to behave in future, rather than worrying about what is happening in the short term. What's very interesting is that we basically believe that while the Fed tightening cycle could continue into this year and probably into early next year, however, the Fed could take a pause in the second half of 2023, and then eventually some sort of rate cut would start coming in mid 2024 into 2025. However, so which essentially means that gold could actually start doing better than what it is doing through second half of 2023. And as all of us have learned over the years that it's very difficult to time the market, one way to benefit from the eventual price rise increase that is going to come into gold in maybe next 2 years is to start, doing your SIPs or start slowly buying into, gold and silver on a gradual basis. Now, why is it that the interest rate has been increasing aggressively globally? And that is to do with the inflation. The inflation has been running red hot. While last year, a better part of inflation was essentially driven by increase in freight cost, increase in supply tightness. However, this year's inflation is more to do with the high energy cost, especially post the Ukraine-Russia crisis. And now with basically energy prices coming down, we believe that we could see a bit of cooling down of inflation in next 4 to 5 months time. However, it does not mean that inflation will come down significantly. You may essentially see inflation cool down from the existing levels from where we are. Now, Kishore mentioned about optimal holdings of gold, and this is a kind of study which was done by World Gold Council for various countries. And I think what's very, very interesting is that for any investor in India, an optimal holding of gold into their portfolio would be anywhere between 8% to maybe around 17%. That's an optimal holding in gold. And I think it's very, very important to understand that compared to some of the other countries, why is it that India has got a higher gold holdings? One thing which is there is that this is on a comparable risk-adjusted return. So, for example, the kind of volatility that gold prices have vis-a-vis volatility that other asset classes have. So, we've always seen that volatility in other asset classes in India is far more than volatility that we've seen in gold. Also, the fact that gold in India also benefits from a continuous rupee depreciation. We've seen on year after year, rupee tend to depreciate anywhere between 2 to 3%. So, gold in India benefits from increase in gold prices in dollar terms, but also rupee depreciation. And thus, various studies have now shown that probably anywhere between 5 to 15, 8 to 15, 17% is what your gold you should have in your portfolio. Now, looking at some of the returns that gold has generated, in fact, if you look at among all the commodities over a 20-year period, gold has generated on an average 10% return, and silver has generated roughly about 8% return. So gold and silver are among the top 3 return generators among the commodities asset class, and that clearly shows the importance of having both gold and silver in your portfolio. Also, gold does well during the times of inflation. So we've seen that whenever in India, especially when inflation increases by 7%, we have seen gold doing well. And now, as you are aware that we are into a phase of high inflation, gold prices in rupee terms would do well, because this would mean that there is a depreciation of the currency. So the Indian investors would actually benefit from the depreciation of the currency, as gold is denominated in dollar terms, and essentially we import gold. So as the currency depreciates, the imports become expensive, and thus the resulting factor is that gold prices in India tends to go up. Moving on to silver, the optimal weight for silver is roughly 6%. A medium risk investor should ideally have 6% silver in their portfolio, and I think that's where the Motilal Oswal fund does very well, where there is an allocation to both gold and silver. So as an investor, one would benefit from the price rise, but also the alpha that silver tends to generate because of the increase in volatility that silver has. So both gold and silver are a fantastic way to invest into precious metals. Now for silver, something which is very interesting is that silver, most of the silver essentially production comes from lead, zinc, copper mines. So as some of these mines tend to reach the end of its stage, What we believe is that the growth in silver production that we've seen in 2022, 2023 will kind of start, plateauing. And that's when we'll see that the supply of silver, the growth in supply starts, kind of flattening. However, demand, for both gold and silver is likely to be very, very high. Jewelry demand, we believe, is likely to see, extremely, robust, driven by, growth in economy, driven by rising incomes. But also the fact that, now purities, after the hallmarking has come in, there has been essentially increase in purities, which is also driving, kind of demand, higher. In terms of silver, the global demand, essentially large part of the global demand for silver comes from industrial usage. And some of the big industrial usages are your electronics, your electricals. And as, we become more and more high tech, as our homes become connected, as we use more electronics, our cars become more connected, the usage of silver is likely to, increase. For example, we recently did a study on the amount of silver goes into each car. And, what we found out was fascinating that, on an average, in the each high-end car that is available globally, about 16 to 18 grams of silver is used. So as even our, I would say the 1200 cc, 1500 cc cars become more high tech, the usage of silver in these cars would eventually increase, and that would mean that silver demand continues to see a consistent, upward trajectory. Also, if you look at silver investment demand, has been very, very robust. In fact, India has seen significant increase in investment demand in silver, especially driven by price, given the fact that prices have, fallen considerably over the last year or so. And that means that India has now one of the largest importers of silver in the world. We've seen a significant amount of increase in physical investment demand in India, in United States, and other parts of the world as well. Now, I was talking about industrial demand, and this you can see that there is a consistent increase in industrial demand for silver. In fact, we believe that globally, industrial demand for silver will touch record levels, and this is likely to be driven by essentially, automation. This is likely to be driven by usage of more and more electronic equipment, and that is obviously likely to drive demand for silver globally. And the forefront of this usage is essentially your solar, photovoltaic, as we call it. So, as you are aware, the world is increasingly moving towards green energy, and solar is at the forefront of it. And, one of the biggest usage of silver is solar. So the solar panels are essentially made out of silver paste, where there is about 90% of silver in it. And I think what is essentially happening is that as more and more countries become conscious about carbon emissions, usage of solar energy is increasing, and that's why we expect that continuous growth in installation of solar. So yeah, so that's kind of a brief overview of what's happening in the global gold and silver market. Very quickly, I want to say that yes, maybe in the short term, we may see a bit of further price correction. However, over the long term, there are fundamental factors which are getting developed, which would benefit investors of gold and silver, and one should essentially look at a more staggered and a systematic investment into both these precious metals. Yeah, thank you very much once again.
Thanks, Chirag, for your insights. Again, thanks for being here. So now we can start the Q&A round for you. So I just have a list of questions, and then we can go ahead with the rest of today. So the first question that comes to you is basically, why is there a low allocation to silver? Especially when silver is expected to outperform. Any answers to that?
No, so I think what we've seen, Pratik, in India is that essentially the silver investors have been traditionally buying silver in forms of bars and coins. Essentially, I think the probably the awareness of silver financial products and the availability of silver financial products has been very, very limited. So if you actually look at our estimate is that over the last 8 to 10 years, about 19,000 tons of silver was essentially bought in the forms of bars and coins, because of lack of awareness about the products that were available, for silver. And I think that's essentially the key why, silver, unlike gold, is pretty dominant on the physical space.
Got it. And this another question that keeps coming up. Which of these asset classes will at least out of gold and silver is historically or at least expected to outperform, especially in a bearish or a downward trending market? What is your opinion on that?
I think in a bearish market, gold tends to outperform silver, given the fact that silver has got much higher volatility. And I always tell people silver is like gold on steroids. So that's why you will always see that silver has a far higher beta, far higher volatility. But also it is because of this high volatility also generates a certain amount of alpha over gold on a long period of time. So essentially what happens is in a bear market period, silver gets probably hammered much more than gold. However, in a bull run, silver outperforms gold by leaps and bounds.
Got it. Thanks. So, how much does India contribute in the demand for silver across, global industries? If you had some data on that, it would be great if you see
Sure.
any sort of, analytics on, where the demand is coming from, or, where is silver being used from the Indian context as well as from a global context?
Sure. So if you actually look at, Indian silver demand on an average has ranged between 5 to 6,500 tons. We are among the top 4 fabricators of silver in the world. And if you have to break up on the Indian silver demand, essentially it could be, categorized into 4 segments. The largest being jewelry. We love our piles, we love our, silver necklaces and toe rings, and roughly about 2 to 2,500 tons of, silver goes into that kind of segment. Then the second biggest component is silverware, our utensils, idols. That is roughly anywhere between 1,200 to 1,500 tons market. Then we also have a very large industrial market. And a lot of people are surprised when we say that India has a very large silver industrial market. You've got silver plating, which is huge. We also use silver in our electronic equipments, into our homes. All our switches are made out of silver, right? The tips, the contacts. So India also has got a large market on silver, which is roughly about 1,000 to 1,200 tons. And then we've got a very, very vibrant investment market, largely physical investment market, either in form of the small bars or the kilo bars or the coins.
Got it. So this is a question on asset allocation. Traditionally, there is a lot of obviously people who are who don't consider commodities or precious metals as a part of an asset allocation. A lot of people do like the characteristics of the fact that it's very low in terms of correlation to stocks and bonds. What's your opinion as an expert in this? Would you recommend an average person who's building a stock and bond portfolio to add some small amount of precious metals, or would you say that only if maybe someone who is looking at, say, a sophisticated investor should do that? What is your opinion on how retail investor can go about building a portfolio with or without silver and gold?
No, I think commodities are an essential part of one's investment journey, and I'm not saying this because I've spent 17 years in the commodities market, but I always say this, understanding commodities also makes you a better equity investor. Some of our large companies, be it Vedanta, Reliance, Adani, are essentially commodity companies, so that helps you understand, how equity would work. But out of this, if there are 2 commodities which really stand out, it has to be gold and silver. It has shown history. It has shown consistent returns over decades, and especially gold is so agnostic to what's happening on the economic side, right? It still kind of on an average generates you 2 to 3% return, despite the fact that what is happening on the economy, what is happening, on the currency side. So I would say, one has to have gold and silver in a portfolio, and also commodity as investment. Then you could have through commodity funds, you could have through ETFs. That's a different thing. But having gold and silver is very, very important.
Got it. Got it. Thanks for that. So last question, I think this is again, one of the biggest questions we get, I think, so we're mostly equity people. So, I think for us, this is also something of a learning opportunity for us. In your opinion, if because, obviously physical gold and silver is very emotional, how would you answer that question? If someone should or should not hold physical gold and silver, vis-a-vis ETFs, vis-a-vis, I think mutual funds, how would you go about, sort of, breaking it down to, an investor, what is right for what investor?
No, I'm glad that you asked this question. And for this question, there are multiple answers to that, right? There is, I would say it depends on what is your motive, right? If you want to flaunt, then yes, invest in gold jewelry, right? Yeah. Because to me, buying gold jewelry as an investment would mean that buying Reliance at 3,000 rupees when in the market it is available at 2,300, right? So essentially what you've done as an investor, you've already increased your cost by 15 to 20%, which is essentially your making charges. So I would say if you want to flaunt, then yes, invest in gold as a jewelry. But if you are looking at returns, then there are far better ways of investing than investing in jewelry, right? If you want essentially liquidity, right, then invest into either ETFs, invest into silver funds which are available, invest into bars and coins, right? But if you don't want to store, then don't invest into bars and coins. If you have a long-term vision and you are okay to lock in your funds, right, then invest into sovereign gold bonds. So I would say each investor needs to understand what is his motive, what is his horizon, and what's his objective. Yes, if you look at on a broader scale, then ETFs funds would allow you liquidity, so that tomorrow if you want to sell, you would be able to easily sell it in the market. So I would say if you want to flaunt it, buy jewelry. If you want to have a hassle of holding it and worrying somebody's not going to steal it, then buy physical. Otherwise, the financial paper instruments are as good as physical gold.
Got it. Got it. So I just, one last question, this is my own question. So I know a lot of people who buy gold, but I don't know a lot of people who, actually end up, selling gold. Since you're obviously, been there in the industry for so long, what is your take on, is it, is selling gold the same or, almost as transparent as buying gold? What is the experience that the customer has? Because a lot of our viewers are looking at investing in gold and silver for the first time. So I think it'll be good to understand because I mean we all know that through mutual funds or ETFs or even sovereign gold bonds, it's quite transparent. But what is the experience of someone who's bought physical gold and who's trying to sell it?
So I think if you bought gold in probably jewelry form, then yes, there is always an hassle because the pricing, every jeweler would have different, some jewelers would, have a 5% gap between buying price and selling price. So obviously, when you go to sell jewelry, that's that kind of risk that we have. Whereas if you are holding a bar and a coin, which is a 24 karat, 39 or 995 bars, you tend to get a transparent pricing. If when you go to sell jewelry, that's when, it becomes challenging, and that's when it becomes very, very critical to look at whom you are buying your gold from and whether that jeweler would have a transparent pricing system or not.
Got it. Got it. Great. Great. Thanks, Chirag. Thank you for coming and thank you for your insights.
Pleasure.
We look forward to having you more with us, in the future. As always, thanks from all of us at Motilal Oswal Asset Management.
Thank you. Thank you.
Excellent. So thank you everyone for making it for this event. This is our so just to introduce myself for those who don't know me, my name is Pratik Oswal and I head all of Motilal Oswal Asset Management or Motilal Oswal Mutual Funds, ETFs and index funds business. So we at Motilal Oswal have launched a lot of funds and we've seen a lot of traction in ETFs and index funds in the last 3 years. We today have the widest range of index funds in India, approximately 27, 28 products that we have in our bouquet. And today we have, funds across all categories. I would say the only category which was missing in our bouquet was, I would say, gold and silver or commodities. And, with this NFO, we are currently live. It's the Motilal Oswal Gold and Silver ETFs FOF. It's a fund where, investors, get to have a mix of gold and silver in their portfolio. We believe that both are excellent asset classes for investing. And, we have this NFO going on, which will, end on the 7th of October. And, I wish for everyone to participate on this NFO. We believe that, I think commodities or precious metals are excellent, asset classes for diversification of your portfolio. What we've also seen is that, the true way to diversify a portfolio is not by adding, more equity mutual funds, but actually to add additional asset classes. So, if you're looking to diversify your equity exposure, you can look at adding international stocks or funds. You can add gold, commodities, you can add bonds, real estate. So I think a multi-asset portfolio is something which we really recommend to almost all investors. And, commodities is I would say, essential part of that portfolio. We also recommend, having a small, percentage allocation to your overall portfolio in the form of gold and silver. I think that's quite prudent. As our experts on the platform have also said that, gold and silver, especially gold, tends to do really well in bearish market conditions. So, especially markets where we are today, it tends to hold up or even appreciate in sort of tough conditions. So I think, but we also obviously don't recommend investors to speculate and use gold and silver as an asset allocation decision where you have 5 to 10% of a portfolio in it for a very, very long time. So with that, we will wrap up this conference. Thank you everyone for being here, and we obviously will come up with a lot more conferences in the future. I would recommend a lot of our viewers to, if there's anything that you would like to know about investing, about equity investing, or about passive funds, about what's happening with the investment industry, please do get in touch with us. And I mean, our main role as a asset manager is to education. So we are big believers of education. So would be more than happy to take suggestions on how we can plan future events for our investors. So thank you so much everyone, and see you on the next one. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.